Let's review our trades for today. Today is Monday, October 2nd of 2023, and we did quite a few trades in our main option trading account. And before we get into those trades, I just want to mention something that popped into my head a little while ago. This option trading that I do and that you most likely do also, this is a business. And like in any business, sometimes things go perfectly smooth and you forget how smooth they're going because everything's going so easy. And sometimes things don't go smooth. And at that point, as the owner of the business, we have to jump in and fix it. So today, a lot of what we're doing is fixing some positions or working to adjust them to put them in a more favorable spot for us, and all while still collecting money. That's one of the nice things about this business. We can get paid even when things don't turn out. Sometimes in my other businesses, like real estate, sometimes you end up losing money. So it's nice to have a business that we can rearrange things and still get paid to do it. So let's talk through our trades. First of all, we have NEP. This is a covered call position. We've also been selling some naked calls and bearish call credit spreads because it's gone against us. So today with NEP having another big drop, I decided to sell additional calls. So this will be our covered call. Then we have some naked calls and bearish call credit spreads at strike prices above $25. So we sold 4 of the October 20th, $25 call options and pocketed $2 per share. As you see, over the past week, or actually past 4 trading days, NEP has dropped 50%. We go up here, it's 50, and now it's down to 25. So tremendous drop, really fast, almost as ugly as you could possibly get. Sometimes these are this bad, and we're down pretty good on the position. It's really turns into a position where it's good to see what option trading can do for you. So we've been collecting cash or call option premium by selling calls against it, some bearish call credit spreads, some covered calls, some naked calls. And so we got a lot that we've sold. We sold the 35s, we sold the 45s, and now we sold the 25 call options. So it's helped prepare it. By no means is this a great position for us, but it is one that we are repairing by collecting more cash. So today, that same October expiration, that's the expiration of all of our call options, we collected $2 more. So we'll see what happens in the next 20, I think it's 18, 19, 20 days left until the 20th. So we'll see what happens in the next few weeks and then adjust this accordingly. We are keeping an eye on this, so you got to be careful with short call options. I know I've communicated back and forth with several of you in the Patreon group. Got to be careful with these because if NEP were to go way back up, well, we're short the 25, which you can say that's our covered call, but then we're short the 35s, short the 45s. So if for some reason, I mean, weird things can happen. If for some reason we're to shoot way back up, let's say Warren Buffett came in and said, hey, I'm buying half of NEP. Boom, all of a sudden this thing takes off. So you really got to be ready for something like that to happen. So have a plan and work that plan if it happens. We do have some protective call options on some of it, but some of it is naked. But we are watching it closely, and we are trying to close them out when they get down to next to nothing. All right, now XLU, another one that's just taking a jive, and these high interest rates are hurting some of these utilities, and as a result, the utility ETF. So we bought to close. We had 2 strike prices that we had sold. Here in the October 62 and the October 63, we had 5 of the 63s and 1 of the $62 cash secure put options. And so what we did is initially we rolled this out to January, kept the same strike price. I was thinking, you know what? I'll turn this kind of into a covered call, collect a little premium on these January put options, a little extrinsic time value, and I'll kind of turn this into a covered call by selling the $57 call option. So, again, you want to be careful of that because we're short the put options, which will act like a covered call until it gets to our $62 strike price or $63 strike price. Then it'll stop acting that way and we'll be more like in a naked call position. So for this, we collected $1,265 minus commission. Now that was the first trade we did. So basically we just rolled out our October short put options to January. And the new thing that we did is we added a short call option. And then right here, you see I bought to cap our loss if that were to happen. If XLU were to go way back up and go through 57, go past our $62, $63 strike prices, then we bought the 65 for protection. But then as I thought about it, I was like, I really like to improve that position. We collected a pretty good wad of cash here. Why not use some of that to improve our position? I really should have thought about when I did this initial trade because yes, we did lose a little bit because of commission, a little bit because of slippage, but it happens. Sometimes the brain reasons things out down a few minutes later, a few hours later, and that's what happened here. So I took $929 of the $1,200 we collected and I rolled our strike prices down. So we bought to close the January 19th next year, here in a few months, $63 and $62 put options, and rolled them down to 61. So we improved it. We improved the majority of them, which were the 5 at 63 by $2, and improved the 1 by $1. So now let's take a look at our chart here. Remember, we collected a nice premium. We ended up walking with a little over $300 for doing this right here. So we'll pull our charts up here. You kind of see what's going on. So like NEP, just not as drastic, XLU has really had a big drop. Over the past few weeks, it's down 15%, which for ETF, utility ETF, that's a big drop. And we do see, and I think I mentioned this when we entered this position, that this can move. You see going back here in 2022, September, so that it dropped within, what was it, about 2 months? It dropped 23%. So now we see that just the past few weeks, we see that we're down 15%, 15%. So definitely can move, as you can see here. So now we've done is we roll our strike prices down from the 63 and $62 area down to 61, which notice is right here, the area that should serve as resistance when it comes back up. So that's that $61 area, which was a low going back here into early September. Now we sold this $57 call thinking that this will act kind of like a covered call up until $61. So we sold this call, and we could always just let that be a sign, or we could always liquidate that $61 cashier put option and just buy shares, and that would turn it into a true covered call. And if for some reason XLU were to come up, then we may consider doing that. Remember, we also bought the $65 call option, so really XLU could come up to 65, and that'd be our max loss here as far as that call option. But our $61 put option would then be worthless. So kind of works both ways. If it were to come up, our call option would lose some money, but our put option would gain some money, and vice versa. If it continues lower, our $57 short call will lose value, but our $61 cashier put option will go up in value, so that would be a loss for us. So kind of playing this like a covered call, but without actually owning the shares, okay? And able to walk away with a little over $300 for that. So we kicked it out a few months. Now, I did only, let's see here, on our short call option, I did only go out to November. I did that on purpose. I didn't want to go too far. I want to be able to adjust this thing if XLU were to come up. I do plan to keep selling covered calls or short calls against XLU. There's no earnings here, although a lot of the companies will be announcing earnings. There's no earnings with this ETF, so we can continually sell call options against it. I do plan to do that. And one reason why I decided to sell at $57 strike price, let me switch over to my monthly chart here. So it's $57 strike price, it's right in here. And see, it's right at an area right here that should have served as support for it. So area right here, 57. And see, it broke through it. Now this is the monthly chart. So now our next area of support looks to be right here on this $53 area. That's why I decided to go ahead and sell those call options. So if it keeps dropping, the call option premium we got to help fund rolling those cashier put options down, well, that'll improve our overall position. So we'll watch this closely with that short call option. All right, moving on to IWM. Another one like a lot of the market moved against us. The S&P 500 was down, I think it was down 5% in September. So overall the market's down, which that happens. It goes through ups and downs like the waves of the ocean. They go up and they go down, and they were down last month. So we bought to close the IWM October 20th, 180 puts and 183 cashier puts. We were able to roll them down quite a bit to the 177 put. So we rolled the 180 put down $3 and rolled the 183 put down $6. And we still walked away with a tiny baby little credit, about $5 when you figure the commission and everything. So let's take a look at this chart here, and I'll show you why I did that. So remember, we were way up here at the 180 and 183, so they were way up here, right above it, right around the area it should have sort of support, and that support ultimately failed a couple weeks ago. So because of that, we wanted to get it down. So we got it down to 177. It's still in the money by about $3, but we're able to get that 183 put down quite a bit. Now if IWM were to come back up and test this area right here that should serve as resistance for it, may give us the opportunity in January. We still have quite a bit of time here. We still have about 3 months to that January expiration. But that gives us a chance to get out. But notice the volume's higher as it's come down. Today made a lower low. And because of that, I wanted to prioritize, go ahead and get that strike price down. When I saw that lower low today from the low from about a week ago, which was right there on 174.29, I decided, you know what, let's just go and get this rolled down now in case it continues lower. So the next area of support looks to be right around here, right around this area, which would put it 172, and below that around this 169. So definitely some room for IWM to come down lower, before it finds its next support. Once it broke through support today, I was like, you know what, let's just go ahead and roll that down before it gets even more difficult to roll it down. So happy that we got it down that low in an ETF. All right, TSN. So we've collected a lot of premium over the past few years in Tyson. I think our overall out-of-pocket cost is it's less than $40 per share. I think it was $40, and this puts us at $39 and what was that, 42 cents. So what we did is we were in a covered call. We are in a covered call in Tyson, TSN. And we just simply rolled the strike price down. I'll show you why I did that in a second. So we bought to close the Tyson October 20th, $52.50 covered call, and kept the same expiration day, a little less than 3 weeks out, but sold the 50 call, pocketed 58 more cents. So take a look at our TSN here. And the reason why, as you see today, it had been finding nice support right here around this what is this, 49.20, but today it pierced it. High volume. Now the volume wasn't exceptionally high, but it was a little above average. And we do have a nice leg, so buyers did support it. But with it making a new lower low on this daily chart, I decided, you know what, it was way up here. Didn't have much value left in that $52.50 option. See, we ended up buying it back for 19 cents. We got 77 cents for the 50. And I felt like if it comes back up, it should find resistance in here. Quite likely it'll keep going lower for a little bit here because this support's right in here. It pierced that support that goes back here to June and July. So it pierced that support from a few months ago. Now it could go as low as 47. Notice this low back here in May. That was around 47. So that's why I decided to go ahead and roll it down to 50. If it ends up getting caught away from us, we're still good in this position because our out-of-pocket cost for the past few years is at $40. Now, don't plan to let that happen, but if it were to just really have a big kick up, go way up really fast, then it could be difficult to roll that 50 up. We can add this position if we need to by selling cash or put options to help roll that cover call back up. But I feel good with this. We're at an area that should serve as resistance, so if it continues declining and goes back up over the next few weeks, then we should be able to roll it out and maybe roll it up if we want to. It is supposed to announce earnings. That's why I wanted to roll the October option. I want to try and be able to adjust this here in a few weeks before we go into the earnings season for Tyson. All right, TXN. So we bought to close the TXN October 20th, 165 put, and rolled them down by $5, but we had to go out to December to do that for a credit of 76 cents per share. So Texas Instruments. And what happened is that it came down to an area that should have served as support around 170, or I'm sorry, it was 160, and it kind of pierced it. So because of that, I said, you know what, now that we're getting a little bounce today from its low, which is around 156, I said, let's go ahead and roll this down. It was around this 165 area. We got it down to 160. Of course, we have to go up to December. We'll have to be in it through earnings, which you don't particularly care for, but we're able to get it down $5 in a good, solid company. So happy to do that. And then actually pocket a little bit of money here, 76 cents per share times the 300 shares minus commission. All right, finally Verizon. So with Verizon, did a little flip-flopping here. So we bought to close 4 of the October 20th, 33 puts. We really just rolled those 4 out. So we rolled out to January at 33. And notice we sold 5 of those. So we were able to get one of these. So we bought to close 5 of the October 20, $35 puts. We were able to get one of those down to 33 because notice that we only rolled 4 at the 33 out to January. So anyways, we got one of them down from 35 to 33 and got the other 4 of these 5 here, $35 strike price put options down to 34. So able to roll them down and roll them out. And one of them able to roll it down $2, which percentage-wise, that's a pretty good percentage. And we walked away with $15 for this minus commission, so not much. The biggest thing here is that we got it rolled down, which is what I really wanted to accomplish here. All right, so looking at Verizon. So another one that kind of been seesawing on us. Verizon had been in a downtrend. Then it made a nice higher high right here on this daily chart. Came down, was retesting it, setting up for a nice higher low. Went up, hit the green moving average, and since then it's just been down, 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 down. So I want to get these cash carry put options rolled down, which we were able to. So we got it down from 35 to 34. Then we got the 33s rolled out. And so happy to get that done and just one of those 35s all the way down to 33. It's a little closer to that, the money. And now we'll see what happens over the next several months with Verizon. So that's our trades for today. We are watching all of our positions, starting to kind of eye the ones that expire this month, especially the ones that don't have much time value left in them, especially the ones that have gone against us in a bigger way. We have some orders sitting out there trying to adjust them. So we'll look to adjust those and close some out and enter new ones as we have the capital set aside for it. So that's all for today. I hope you have a great evening.